Good morning, everybody. Welcome to the Flow Show. The next 4 years starts today, and it's going to be a roller coaster from about 5 p.m. today in the UK, at least. Midday in the US, it all kicks off, the inauguration of Mr. Trump, and then we'll see what wonders it brings first time out. Hope you're doing well. Hope you all had a good weekend. Just me this week. Mr. K-Man's off with some personal stuff again. So US holiday as well, but I know everyone's going to be at their screens in the US because other markets are open around the world, and prices are going to move. So we'll get stuck into all that sort of stuff shortly. First of all, let's get through some of the headlines. Not too much going on first thing this morning. China, they kept their LPR rates unchanged overnight. You see the rates there unchanged, 3.1%, 3.6%. So no changing of rates just yet. Reminder that we are heading towards Chinese New Year, which kicks off 29th of January. So just over a week's time, they'll be closing up. So we can see a bit of movement in some of those Chinese assets. There has been a rumour that they might drop an RRR cut before the holiday, but we shall see whether they do that or not. Over at the ECB, we've had ECB's Elderson saying that the ECB is not yet done with cutting rates, but then throws up some cautionary notes saying if we lower the interest rate too quickly, dialing down services inflation sufficiently could become complicated. But if we keep interest rates too high for too long, then we risk undershooting our target. Hawke Holtzman was out as well. Again, not committing to another rate cut. He says the ECB risks credibility cutting rates when CPI is rising. He says ECB rate cut in January is not a foregone conclusion. We did get a sources piece out on Friday from EconoStream saying that ECB insiders see a 50 pip cut as unlikely, but agree any cut would happen in March. So that's when they're circling the calendar for another rate cut. A bit of data out of the US on Friday. We got housing data, not that it mattered because everyone's been looking at obviously what's going on with Trump. Housing starts came in pretty solid. These are November numbers, so before the usual potential December slowdown that we can see in housing markets. They came in at 1.499 million, up from the 1.33 million expected and 1.29 previously, so nice and healthy there. Permits, that was thereabouts, a decent beat, 1.483 over the 1.46, but slightly down on last month's 1.49. But otherwise, nothing of note to see there, no collapse in housing numbers. Industrial production a little later on, coming in healthy as well, up 0.9%, manufacturing at 0.6%, and a rise for the capacity utilisation rate by a good chunk as well. So more good data this week or last week for the US. Fed, they are now in their blackout mode, so it's all going to be nice and quiet from the Fed heads from here on into the FOMC, best part of the month when we get to all the central banks shutting up for 10 days to 2 weeks. Makes things much easier to get through the day. Anyway, one thing the Fed has done is they've withdrawn from the network of central banks and supervisors for greening the financial system, the NGFS. This is an initiative that a lot of central banks signed up to promote green financing. The Fed have pulled out of that. One could draw a bit of conclusion that there's been a bit of pressure from Trump on that, but the official Fed statement just says the scope of the NGFS moves some of the things out of the Fed's remit, hence why they've pulled out from the program, although they will be aligning with it somewhat. Speaking of Mr. Trump, obviously we are just awaiting what's going to happen later today after all the pomp and circumstance. supposedly there's 100 or 200 executive orders that are waiting to be signed, a big pile on his desk, and he's going to start getting through those. So we're going to be waiting to see when we get those coming over and what it all means. Some of the headline grabbing ones already are saying that he's planning a national emergency to do with the US-Mexico border. He's planning a national emergency on energy. He's going to direct the military to begin construction of an Iron Dome missile defense shield, and obviously remove wokeness from the military too. So all this sort of stuff's coming out, and we're waiting to see exactly what it is. And on top of that, if he's not busy enough, he's decided to launch his own meme coin over the weekend, and so is his missus, Melania. So they've all entered the meme coin space, and already we've seen it rocketing up. I've actually stuck it on my watch list just to keep a cursory glance on it. There you go. There's Mr. Trump's coin, and his missus has done pretty much the same too. So that opened up on Saturday to anyone who wanted to throw some money at that. I don't know if any boys and girls got in on the hype and are sitting on some decent profits so far, but we'll see how that goes. We'll see if this coin reflects his performance in the White House, whether it's true to what the market performs or whether the old meme coiners decide they want to take it for a bit of a ride up. Anyway, we'll keep an eye on it just for entertainment value, I think. Right, before we get into Trump, let's have a look at what's coming up this week. Let me grab my old calendar. Right, so not an awful lot. As mentioned, today is a US holiday, so no data out from the US. We do have the Bank of Canada's Business Outlook survey, so that's something for the loonie to get its teeth stuck into ahead of Trump. Tomorrow in the UK, we get the jobs report, which is still a bit of a shambles, given that our stats office, the ONS, are still trying. I think it's over a year now they've been trying to fix the data. There was a nice article this morning saying that the cost of getting this survey fixed is now pretty much doubled, over 40 million it's costed to get this crap sorted out. It's a shit show. I don't know how we used to own half the world, believe me. Anyway, tomorrow after the jobs report, we get Germany's zoo survey. That'll be the first for the new year, so we'll see if there's any New Year's optimism coming into that one. Canada CPI data later on. They'll have the market jumping around for the BOC, which is coming up shortly as well. Kiwi CPI as well. That'll be an indication for the RBNZ as what they're going to do next with rates. These CPI reports become even more important with central banks who are in a cutting phase, like the Bank of Canada and the RBNZ, who have been cutting pretty quickly, and they'll need to take note of the lag in when rate cuts are actually seen in the economy. But this CPI data will tell them whether they've been going too fast, too slow, or just right. On Wednesday, we get some public sector finances from the UK, which, given the backdrop at the moment of the UK government and Chancellor, the market not taking a good view on the fiscal measures, budget, etc. so far. If there is a big jump in borrowing, that's going to heap some more pressure on the government as well. Still a little bit quiet in the US. No real data of note coming out from that or the rest of the world. So a bit of a quiet Wednesday. Thursday, again, not too much coming out from the European side, at least. We get Canada retail sales in the afternoon, but still very little on the US calendar. Obviously, initial jobless claims dropping, Canada retail sales, and Eurozone consumer confidence, which is always in the negative. The big one is going to be CPI on Thursday, coming just ahead of the Bank of Japan announcement on Friday. So that's really going to be outside of Trump, that's going to be for macro and central banks, that's going to be the key one. Are they finally going to hike again this month, or are they going to kick the can once more? As the sources are already telling us, it's going to be down to what Mr. Trump has done or not done. And if there's no big waves, then potentially we are looking at a hike. For the rest, we're getting the first PMIs of the new month coming through as well from Europe, UK, and around the globe too. So keep an eye on those. Then later on, we get in the US Friday, we get some more home sales data and the Michigan consumer sentiment number, flash number for. Sorry, I think that's the revised number. We had the other one last week, was it? Yes, so that's the final number where we saw those bigger expectations for inflation coming in those, but that's the final number anyway. So not too busy a data week, but there's always going to be lots more going on with Mr. Trump and whatnot. Right, so really my final thoughts for Trump is this, and you've known my view for quite some time now. It's really going to be a bit of a mess. Okay, there's not much I can call right now. I know other people have got plans. I know Blake's got plans for this, that, and the other, but I can't see any clear pathways from this one. And one of the reasons is we've got this tariff threat coming in. So for other currencies, the MEX, Canada, whatever, China, there's a risk to those currencies, but it's not all one-way risk. Okay. Let's take the case of Canada. If he comes in with big tariffs on Canada, it could hit the loonie pretty hard. I know some guys and girls are in our chat room are positioning with options in dollar CAD. Any big tariffs, and we could be going up to 150s or wherever. But tariffs are only part of this equation. Okay, what he does, what all these measures mean for the US economy is the other equation. So if he comes in big on Canada with tariffs, yes, you could see the loonie weaken and dollar CAD shooting higher. But if the market takes it all together and says, well, actually, even with all these tariffs and everything that's going on, this isn't going to be good for the US economy, you could see the dollar going the other way, which means dollar CAD going down. So we could have a situation where we shoot up for 5 minutes and then come all the way back down again. Okay, so there's no clear, defined pathway, as far as I'm concerned, into what the market may do with all this. Okay, there's two-way risk, both sides, whether it's the dollar side or the other currency side, be it the euro, China, Mexico, whatever. Okay, that's my biggest risk factor going on now. So there's nothing really I can pick out from anything, well, maybe except for cryptos, to say that this is definitely going to go one way, any particular asset. The only one that might, or one of the only ones that might have a bit of a clearer path is something like oil. Okay, we know oil's had a little rally. We know that manufacturing is still in the doldrums. So we know production is still quite high. So there's no fundamental reasons why oil might go higher. We also know that Mr. Trump might be enacting an emergency order on energy, that he wants to drive prices lower. He's going to get everyone drilling, which means more production coming online. Again, it's all negative on paper for something like oil markets. So maybe something like oil is one of the assets where you think, yeah, there's potentially a clear path here. The upside's going to be pretty tough, unless he's going to kick a manufacturing boom into play, which is always possible. Otherwise, there's more reasons why it will go back down than it should go back up. If he solves the war in Ukraine and allows Russia back to market, not that it's really away from the market anyway, but you get my drift. There's potentially more oil coming back into the market. So there's, at least in this asset, there's more reasons why it might go down than it might go up. For everything else, it's really a coin toss, and I don't like coin tosses when I'm trading. I don't do them. I like to have a bit of certainty. So I'm not going to probably do much. I'll manage what I've got. My dollar China, my Aussie Kiwi. Yeah, my dollar China's at a bit of risk, but I'm happy to play it. It's still the path of least resistance. Still seems higher, even though I'm short. So I'll go with my stop reverse if it does bust higher. And if it's good news, then I'll be on, hopefully, touch wood, on the right side of it. But apart from that, maybe a bit of sniping. I'm really not looking to do anything until I know what's coming and what it means for the US economy first and foremost, and then others after that. So trade carefully, tread carefully, my friends, going into today and tomorrow and whenever those orders are signed. That's what we are all waiting for. We want to know what these policies are going to be, and then we can make a judgment on whether it's good, bad, or otherwise. And in the meantime, markets, they're open as far as the rest of the world is concerned, and not doing an awful lot. We're just drifting around, so it's not easy to draw any conclusions for any of these moves this morning. Euro dollar sitting above 103. Doesn't matter. We could be at 106. We could be at 101. Could be at parity this time tomorrow or the day after. So let the dust settle. Pick your levels. Probably your best bet across any of all of this that's happening is go on to, if you don't have them, have your cleaner charts. Okay. Go on to your longer term charts. Look at where the bigger levels might be, the bigger ranges. Okay, there's not a lot on this one because I had a little tidy up the other day. But you can go on, you can find your bigger levels, where the bigger levels are, the 112s, the 114s, the 115s, all of these types of levels. You can go and do this chart work. Okay, get yourself a nice clean chart, take it in the wider context, and just find out if you're going to trade it. Trade the bigger levels where there's more potential for any big price moves to pull up. You know, I've been talking about cable 121 to 120 was the big level. We've held it, we've bounced. Okay, it's not going to matter. Being 90 odd pips away, 190 pips away, it's not going to matter potentially over Trump. Okay, so we could end up at 118, who knows? Or we could end up at 125, who knows? But just do your homework. There's no good sitting on a 15-minute chart on an hourly chart today and having levels every 20 pips. Okay, it's not going to cut the mustard over a big risk event like that. So if you want to trade over and around this, then you look for the bigger levels, the bigger, wider areas where if we do get a big move, maybe that's somewhere where price runs into trouble. Okay, so treat the longer term chart like you would a short-term chart, an hourly chart, except your levels are much wider. They're 100, 150, 200 pips apart rather than 20, 30 pips apart. And give yourself a bit of a chance. If you want to have a trade, then at least you know if you're picking big levels and they break, you don't have to be wrong too far to know that the trade's offside or going the wrong way and you can get out. But there's no point looking at anything sort of in 100 and 200 pip range, depending on what you're looking at as well. Mike, are euro dollar shorts getting nervous? Well, it doesn't look like it. You know, if you've been short from 112, why are you getting nervous 100 pips above the low of that move? Yeah, short-termers might get a bit nervous. If you were short from 105s, 104s, you're going to be a bit nervous. And that's probably half the reason why we've seen a bit of a bounce, because the closer we've headed towards the Trump risk, the less likely this has looked of going down. But we haven't come close to breaking the trend. So short-termers will be nervous, most definitely. People short from up here won't be nervous until probably we're back above 106. So plenty of room to roam. Okay, so yeah, some are, some aren't. You got to look at the context of who might be short where. We don't know, but you can make assumptions. Someone was selling it up here big enough to get it all the way back down here. Okay. Same thing with dollar MEX. You know, this one's been really all over the place and it hasn't strayed too far up off its highs. You know, we had a big, strong move. We've already had Trump rumors in amongst all this stuff, some of these spikes that we saw. So again, this is the other side of the coin. This is a market that knows there's something coming. It's already traded a lot that way. So now it's waiting to see, is the news going to be as bad as what is expected, or is it going to be slightly better, or is it going to be unchanged? You know, what you need now is something big. We're waiting on something big. Dollar MEX is waiting on something big. Okay, if it's not big, or it's as we've heard about previously, then this is a big buy rumor, sell fact trade, and we probably might end up back down sub 20 because the market says, well, okay, we've had the sources pieces and everyone giving us indication what he's going to do. If what he does matches up with that, well, what more upside is there possibly for this pair? We've priced it all in. Okay, and then you might see it going the other way. But if he does go much harder than everyone's expected, you know, he said what? He's going to slap 100%, then 200% tariffs on Mexican cars coming through. Well, if he says that tariffs are going to be 500%, that's obviously much worse. And then you see a reaction. So this is why it's difficult. You've got to be able to judge what his orders mean in terms of from now on, but match it off against what we were expecting previously. Okay, and then you get your reaction. That's why you need some time to read all this stuff, go through it, and be able to make a judgment call on it. Obviously, we'll be doing that in the chat room all day long. As soon as this stuff comes out, we can have quick reactions as to what we think it means, whether it's worse, better, or just in the middle of the road. Yeah, we probably won't get any clarity. And the thing we've got to be careful of is that there's still going to be lots of sources stuff coming out. There's still going to be lots of people trying to guess what it's going to be. The wires have no let up in Trump might do this and Trump might do that, and you've got to disseminate between the stories that a Trump might do this and the Trump is going to do this. Okay, so from this point, it's all about what he actually is going to do. Okay, so again, that's why it's just going to be a bit difficult these next few hours to get a clean read on anything. Yeah, Bram, sitting on your hands is probably the way forward. You know, markets are going to be here next week. They're going to be here on Wednesday, Thursday, Friday, and all the rest of it. You don't need to try and grab a trade now because you think there's a lot of pips on the table, because there's also equally as many pips to be lost on the table as there is to gain. So push the probabilities in your favour. Gordon, FTSE breakout. We have been speaking about this last week. A lot of fingers still pointing to what's happened in the pound in terms of making it attractive for foreign investors. Again, this could be a move that's at risk of a reversal because a lot of this is potentially getting out of US stocks, Trump risk. You've just had a big move in the pound. That's made it cheaper to own UK stocks. It has been a bit of a delayed reaction, I'd say, though. We've been in this sticky range for quite some time, not doing an awful lot. And really, this leg has only really happened last week. And the pound had already dropped to 121 on the back of that. Maybe because it stopped falling, investors thought that's as better value as we're going to get for our dollars, turning them into quids. So that will do it now, and we'll start piling into UK stocks. If the market takes the Trump stuff as good news for the US economy, likelihood is we're going to see US stocks shooting higher. It could mean that we see a reversal here, okay? Because the market, if they're parking their money over here in the UK and there's no problems in the US, it will come out of here and go back into the US instead. Because if you're putting them side by side, fundamentally, the US is still way out ahead of the UK. Okay, and growth is obviously one of the big proponents for investors' money. So I would not be surprised if the market takes a good view of Trump. Perhaps we see this reversing in the UK, maybe elsewhere as well, Europe and the likes. Of course, if it's a big risk-on move altogether, then everything's going to go up, and it's not going to matter either way. But again, I'll wait and see where this one is come post-Trump and everything we know about him. But ordinary, I would have looked at this for a potential break trade. Okay, but not with that sword of Damocles hanging over at the moment. Derej, how bad other crosses get affected by Trump? Probably, well, depends what crosses you're looking at, but probably your crosses are going to be maybe your better trades to look at if you want to get out of the Trump shadow, shall we say. So looking at Euro Sterling, looking at Aussie Kiwi, looking at NOK SEK, all those types of tight geographical correlations and cross pairs. I wouldn't look at Euro Yen because obviously that's going to be affected by what happens in the Euro, and obviously we've got the Bank of Japan as well, and yields and the dollar and everything that moves yen around far more. But closely aligned, geographically aligned crosses, as I say, Aussie Kiwi, Euro Sterling, they might be better to trade outside of the Trump noise. We're having a break up in Euro Sterling at the moment. We're back above, or getting above that 84.60 area and trying to hold it at the moment. It's not a big line, it's just an area that we've had former support and resistance, but we're looking to have a little move above it at the moment. And if we do get that, then we're going to have a test of this zone up here. Now, yes, this one can obviously move on the back of what happens in the dollar because, as we know, as I always explain, cable can sometimes move faster than euro dollar. So it's a mechanical reaction. So if there's a big dollar move, if euro dollar and cable are going higher, then cable tends to run a bit faster. This one will start coming down a little bit. If they're both going the same speed, then it does nothing. But fundamentally, this has done a bit more recently based on what's going on in the UK. So it's a bit more pound negative at the moment, as opposed to cable, which has obviously bounced from 121 and it's been as high as 123. Big zone coming up here, 84, 80, 85s. I think if we get a test over this week, and I'll see what the data does. If it's crappy data, I won't look to fight this move because we'll probably be heading up through it. But if the data's not so bad from the UK and we get a test up here, that's a bit of a speed move between cable and eurodollar, I might have a little short up here just for the text because, as you'll know, those of you who've been with the Flow Show for a while know it's been a big level, this 85 zone, when we've come down here previously. And a level I've traded several times before. So we've been away for quite some time. We're coming back now. So I would expect to see it putting up a little bit of a fight, shall we say. But you don't need to risk a lot. If we're breaking through 85.20s, then we're probably going to be moving a bit higher. So, don't need to risk much to get in a good trade on this one. Euro Swiss, Derej, again, because it's got the euro side of things on it, it's not a cross that is going to be exempt from the volatility. Okay, if you want to get out of the Trump eye line, you want crosses with lower volatility. Okay, if euro dollar is shooting higher, probably seeing euro Swiss shooting higher. The same with euro Aussie. If Aussie dollar's moving, it's the geographical crosses, as I say, you want to keep a close eye on because they're both going to move the same way versus the dollar. But because they're both quite interlinked, then there's some stability there. There's not going to be less vol in euro Aussie and euro Swiss, okay, than there will be in euro sterling or something like that. So really, it all comes down to volatility. Okay, that's what you're looking at. If you want to get away from Trump, look at lower volatility assets and pairs. Okay, because that's going to keep you in a more sensible trade, shall we say. Ali, I don't know. I'm having a feeling if Trump 2.0 does not say anything about tariffs this week, euro, dollar, pound, and gold will be ramping higher. yeah, I think the chances of him not saying anything this week, I think there's more chances of me sprouting the ponytail by the end of the week, Ali. But never say never in markets. And absolutely, I think it is. But I would have put that as a very, very slim chance, 1% that he doesn't say anything about tariffs this week. So if you want to take a trade that way, my friend, on such a low risk outcome, be my guest. You'll get big rewards, no doubt, but it's a very low chance, I think. Your long goal. So you are taking a punt on Trump not delivering any sort of tariffs action this week. Okay, good luck to you, my friend. Gold in the meantime, we've had a look up towards this 2730s area. We've been up here before. We've knocked around the 2720s, 25s. We've had a couple of go up here. 25s can't get through. We've had a pull back pretty much down to near this prior level here, 26.85. We bounced from there. Now we're just waffling around. So you've had a long, mate. I mean, the path of least resistance still seems to be up for now. This trend doesn't look like it's breaking at the moment, but it is very short term, pretty much happening since the end of December. So it's only 20 days old. But yeah, there's every chance that this goes high. It's got a bit of, impetus behind it. Chinese New Year, a bit of seasonals behind gold as well. Just got to account for the volatility, mate. If you're trading this with 10, 15 pip stops, if it's a volatile one, then your stops are going to count to nothing. I wouldn't look at this right now. If I'm looking at it from a Trump perspective, I wouldn't look at anything until down here, 26, 26.20s, or up towards these highs, 28s. Okay, if we're going to get a big move, those are the areas it's got to break. Okay, when we've proven that we can't break it before that. So in the middle here, no interest for me. But good luck to you, mate. Good luck to you at Ali. Right, is there anything else you guys and girls want to talk about? Not a lot else to think about at the moment. Yeah, it just remains to be seen what's going to happen. Keep an eye, as always, on yields because that's going to be a big driver. The bond markets are almost like the grandfather of markets, okay? They are usually a leader, okay? They're usually the calm heads among assets in financial markets, well, until the last couple of years when they've acted like they're school kids in terms of market moves. But keep an eye on these US yields. Keep an eye on US 10s, okay, if you want to get a good idea what the market is going to do with something. If we're breaking down below 4.5%, okay, that could be an indication that the market is liking what's coming from Trump. But again, it's not a clear-cut trade because are his tariffs going to be inflationary? Are they going to force the Fed into a more hawkish stance than the pause they're at now? Okay, if that's the case, we're going to see yields bumping higher. So usually, if you're seeing yields coming down, it's a risk play, but in this case, it could be something different. But the dollar will move based on what these yields are doing. Okay, 450 is a big level. Highlighted it plenty of times before. It was a big level on the way up. We had the break. It's held. Now we've had a bit of a blow through, but we're coming back down towards it again. So again, this is the market just maybe taking a bit of profit, taking a bit of risk off the table on this move as we go towards Trump. 5%, that's the big area above. If we're up there, that's going to be very tempting for bond buyers to come in, investors to maybe start locking in some yield. So a big move up there. Dollar will be moving in line with that. Dollar yen too. But just be careful because dollar yen's just slightly, or I've noted it last week as well, it just slightly had a bit of a divergence with yields, which is probably the Bank of Japan affecting play as well. This one, I still think it's going to be very hard if US yields are staying high for this to come down. it's going to be very hard for it to come down if the Bank of Japan hike, unless they indicate something really hawkish, because the chances are we're going to get this hike and then we're back on pause for who knows how long, at least until the spring, and we get the wage news and further data. And if the data isn't continuing on its upward trajectory, particularly inflation, if inflation's pausing a bit, they're going to be in pause as well. So we might get a bit of a reaction on this one on the BOJ. That could be a good trade if the market is liking what's coming from Trump and the dollar's stronger, yields are stronger, and you see this dip on a Bank of Japan hike. That might be something you might want to consider fading, because as soon as that's done, as I say, unless they indicate they're going to be hiking 5 times this year, this will likely reverse if dollar's stronger elsewhere and if yields are stronger elsewhere. So that would be my early thoughts for a Bank of Japan trade later this week. Fade any potential strength in that one. Mike, have a look at Aussie dollar. Of course, my friend, of course. Though it's a bit boring because it's the same picture that we're seeing everywhere. You know, I could line up a lot of these pairs. Cable looks the same. Lows, bounce, can't quite get up, can't do a bit more. Euro dollar, lows, bounce, pull back, can't do a bit more. Aussie dollar, Kiwi, it's all the same. Yeah, it doesn't matter what you look at, the picture is looking the same. But what the levels here, you've got to keep an eye on these lows. If we're going through these lows, then something's happening, because we came down here, we bounced from here, we're holding this secondary level, 61.70s that I highlighted on the way down. We're holding that again now, so it's giving it a base to build on. But unless we start busting some of these topside levels, I mean, we can't even get and hold into 62s for more than 5 minutes. 62.50s, this zone here is obviously the bigger one. 62.70, it goes back to this area here. That's why it's there. So that's the big area. But look, the 38.2 fib of this move isn't up until the 64s. So this is still in very weak dead cat bounce territory. Okay, so if you want to be long this, or if you're trying to be long this, you need it to hold here and you need it to hold here. So any further dips on this that don't hold these levels, then we're potentially heading further south. It may be that we get a knee jerk down. We could get a knee jerk to 61, 60, 50. But if it bounces quickly back above after all the news, Trump or whatever, and then we start holding it again, that is your signal to pile in. Okay, let me see if I can do a bit of drawing. So if we get, take that off, if we get a quick move down like that, but then we come back up quickly and then we do something like that, then that gives you the chance of going higher. All right, it's all about how any sort of breakdown holds. Okay, if it comes down, let's get rid of that and rid of that. If we see a move like this where it comes down and then we bounce off of there for a bit, then you're potentially heading much lower. Okay, so watch how these levels. This is the only levels right now down here that matter. These two levels. Okay, how we trade around those over Trump is going to be important. If we're holding below it on a break, then we're going down. If we go down below it, come back up, then maybe we're going to see a bit of bounce, because the market's saying, yeah, we've had a little bit of flush out, but now we're back above these levels. So if we ain't going down, there's only one other way we can go, and that will be a signal for going long. But you can apply that to any pair. You can apply it to the Kiwi down here on these two lows. You can apply it to cable down here at 121, 120.50, 120. Okay, you could get moves through here, but if they don't last, then you know which way you want to be trading. Okay, irrespective of your bias. I hope that's cleared that up for you, Mike. Right, anything else for anything else, or I am going to call it a day, because it's a Monday. I don't like to do too much on a Monday. I wish we had 3-day weekends. Anyway, stay safe. I can't stop repeating that, guys and girls. I don't want to hear any horror stories. You know, if in doubt, stay out. All the old lines I can throw at you if you like. Just be very careful. If you want to trade small. You know, dial your size down to if you do get a hit, it's not going to hurt you or make any difference to your accounts or whatever. Because I'd rather make a little than lose a lot. That's the way I look at trading. Have a great day. Face is running today because Dale's got an interview, so I'll be there with Blake and Dale and whoever else turns up later on. And then tomorrow, don't know, might be a long show tomorrow if we've got to get through all the Trump headlines. We shall see. Have a great day, everybody, and a great week.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.